All right, guys, we're live. Let me fix this camera a little bit. All right. Okay, so today, since you guys are not saying anything on my community tab, today I'm going to talk about the GameStop Robinhood fiasco. All right. That happened just past week. And just in case you guys don't know who I am, Joe Saglimbeni, have a YouTube channel, obviously. I talk about stocks, investing, growing on YouTube, motivational stuff, unboxing, stuff like that. And I try to do a live stream every Saturday. So usually it's between 10 to about 1 o'clock, but lately I've been going late. But look for it on Saturdays. And today, I want some participation from people. I'll be looking at the live chat, and we're going to talk about this whole GameStop stock shorting fiasco. And that's it. So it's been the whole news this whole week about some Reddit group of Reddit investors called Wall Street Bets. And I guess they have a whole list of stocks. They found a whole bunch of stocks that were being shorted by several hedge funds. And they ended up, I guess, a lot of these guys got together, these investors got together, started buying up the stocks. Stuff like GameStop, AMC, Course, BlackBerry, a lot of these different stocks that they kept buying pressured the hedge funds, where the hedge funds had to cover their shorts. They were shorting these companies. The hedge funds were shorting these companies, basically thinking that they were, how you doing, Tactical? Basically thinking that they were weak companies with bad fundamentals, and they can make money by shorting the stock, hoping the stock goes down, and they make a little cash. And hi, Tactical Devil, how are you out there? I see you. And so basically, that's what happened. But the Reddit team actually kept buying the stocks, and the hedge fund had to sell long positions to cover their shorts. And they actually had to end up reaching out and getting money from other hedge funds and other type of companies. And instead of I guess they didn't want to sell the long position, so maybe they had a long position in, let's say, a Microsoft or a Apple, and they didn't want to sell the long position to cover their shorts. And here's the thing: the little man, the retail investor, drew basically a lot of it was through Robinhood, but basically destroyed a lot of these hedge funds, and made them look like the dumb money, because you think the hedge funds are the smart money. And it's kind of exciting to watch, because it's kind of amazing that these hedge funds couldn't handle the retail investors. And then they were basically crying about it, kind of, and saying that the retail investors should not be doing this. So, what was it, Thursday? Some of the stocks were being, you weren't able to sell, weren't able to buy, let's say, GameStop on Robinhood or even TD Ameritrade. I think they had issues where they weren't allowing buys. You could only sell the GameStop stock or AMC or BlackBerry or many of these different stocks. And what happened was it's not really Robinhood or TD Ameritrade's kind of fault. Clearinghouses have certain rules. They're like the middleman of these brokerages and buy and sell. And if there's too much volume, let's say a stock goes up 2, 3, 400% in a day or even a week, the margin requirements are increased on these equities, meaning that an individual investor has to be able to buy. You can't margin these stocks that they margin against these stocks that they want to buy. So since this volume was so strong and the volatility was crazy, the clearinghouses had to change the rules, which they are allowed to do. And Robinhood had to basically follow that because they obviously weren't sure if they could handle this type of, let's say there was a systematic a problem that would cause a major problem on Wall Street with these stocks. They may have not had the complete financial ability to cover some of these problems. So that's what the clearinghouses did. And the problem was Robinhood didn't kind of explain it well. And I'm not explaining it great because, again, let me start by saying that I am not a financial pro or advisor and that everyone should do their due diligence and reach out to a professional before they buy any equities, any stocks, any options, shorting, longs, cryptos, whatever. I'm just giving you my opinion and my ideas and trying to explain the situation. So just so you know that. So basically, Robinhood had a hard time explaining it. I watched CNBC, I watched Bloomberg, and Robinhood had a hard time explaining it. So now they're getting a little flack from the investors, the small retail investors, saying that Robin Hood, steal from the rich, give to the poor, is acting as though they're stealing from the poor and giving to the rich. So I don't kind of agree with that, but this may affect Robinhood because some of these individual investors are upset and they may leave their firm, they may leave their brokerage app or firm and go to another type of brokerage firm. So that's basically what happened last week. Now, I looked at all these stocks. There's probably about 15 to 20 stocks that were shorted. And I'm basically a long-term holder in equities. So I look for quality stocks. So would I invest in some of these stocks? Investing, I don't know. I probably would say no. But speculating is what was really kind of happening here. And that's just a different thing. I don't speculate that much. Once in a while, I might put some money to risk to speculate on a stock or even crypto or something like that. But I know the risks I'm taking. And actually, I think that these Reddit individual investors and retail investors actually knew the risk also. Just because they beat the smart money at their own game doesn't mean that the smart money actually is that smart. And what I mean by that is I created a video a while back, last week or 2 weeks ago, about how I beat the S&P 500 doing 20% a year for the last decade. And basically, I I didn't hedge anything much. I played a couple of options, but I didn't. Most of my options were long term leaps, and I bought mostly quality companies like Mastercard and Nike and Costco. And I'm not saying to you guys right now to buy those companies, but I'm saying if you do a deep analysis yourself, you may find that those companies are able to give you a return that can at least match the S&P 500. So a lot of these hedge funds, if you look them up, are actually not really doing that well. And I don't know if there's a lot of fees. Most hedge funds have a fee, so a lot of well-to-use hedge funds they use these people to try to grow their portfolios or their money. And I think maybe because they just don't want, maybe they don't want to analyze stocks. They don't enjoy stocks, analyzing stocks, looking at balance sheets like I do. And maybe they feel, okay, I'll give you some money, run it for me. And usually they think hedge funds are the smart money, or these money managers are the smart money. But honestly, they're really not the smart money. The indexes themselves, something like the S&P 500, is doing between 8 and 12 or 13% a year for the last decade. So does it pay to deal with these hedge funds and pay your good hard working money to invest in hedge funds that'll really make it 2 or 3 percentage points if they are more than the S&P 500? I think if you study, do some reading, you can learn this just as good as the hedge funds themselves. And you're not going to have to short anything or hedge anything or try to short a stock or even look at a GameStop. You might just consistently stick with stocks like Nike or Costco or Amazon, some of the bigger companies. And you will still do relatively well if you think of it as a long-term investment. Try to stop with the speculation stuff, because that's what these hedge funds are really doing. They're speculating. They don't want to tell you that. They think they're the smart money. They think GameStop or AMC is going to go out of business or something, and they're going to short it. Well, these few retail Reddit investors kind of made them look dumb. And kind of now they're kind of crying and complaining about it. It reminds me of kind of like back when Ackerman was shorting, I forget what it was, Herbalife or something like that. And yeah, he maybe have been right that Herbalife was a bad company or a kind of scheme or pyramid scheme or something like that, but he shorted it, and I think he, lost some money on that speculation. I don't know why they do this. Maybe they have so much money, these hedge fund operators or these Bill Ackman types, that they're bored and they feel that they can beat anything or anyone or any investor. I kind of like the Warren Buffetts of the world, where they buy a Coca-Cola for 20 or 30 years and they get a 15 to 20% return a year for 20 or 30 years, plus dividends, and dividends that actually get raised every year. That's what I look at. Though I think Warren makes some mistakes when he doesn't understand or invest in something like Apple. It took him a couple of years to realize Apple was a great company when he should have been investing in Apple a decade ago. It took him a couple of years to even get into something like Microsoft, if he even got into Microsoft. He stayed with IBM too long because maybe that's something that he only understands. That's okay because he's doing 20, 21, 23% a year and beating the S&P 500. And for himself, it's really not about beating the S&P 500. It's just making his equity or his portfolio or his net worth continue to grow. And that's what it should be for everyone, I believe, is that they should use stocks. And I love stocks. And I've said it in many of my videos that stocks is the ultimate tool to grow wealth. There are some that say, investing in real estate could be better. There's some that could say investing in cryptos could be better. But stocks, done right, can make you a consistent amount of wealth every year, almost to the point where you can kind of know what you're going to get, like 8 to 10 to 12%. Even if you bought a Vanguard total stock market mutual fund, I'm not against that either. I mean, you're going to have some bad years. You're going to have a 2008, 2009. You're going to have a 2001 tech bubble bust. You're going to have a pandemic. You're going to have a black swan event that may cause stocks to fall. I think that I'm on the side of these retail investors because I think that they showed the smart money that they're not too smart. They're not that smart. Now, in the end, will these retail investors lose one day or one of their picks or whatever? I guess they would. But I think that they have the right to buy and sell. I think they have the right. That's what the risk is. I mean, these hedge funds are getting into risky investments. Why can't retail investors get into risky investors? And that's what it comes down to. I think you're going to see things change now because of this, obviously. Congress might get involved. The president might get involved. The exchanges might get involved. Rules will be made again, different rules. And I think that all of this is a good thing. I think stocks are a great vehicle. And I think that there's nothing else out there really that's going to give you a consistent return because you can't buy CDs. Your CD rates are less than 1%. You can't buy really treasuries. You're looking at less than 1-2%. Real estate, yes, but who can afford real estate? But someone who has a job, who has a good credit score, who's able to get a loan in a time during the pandemic where jobs are being lost, people are not, the regular person's not making that much money, and real estate prices are going up where you won't be able to get a loan. So one of the best things still are stocks. And these Robinhood, M1, SoFi type apps are helping small individual investors to learn. Even if they make mistakes, they will learn. And I'm all for them getting better at this. And I think it's going to happen. I think that a lot of these Reddit individual investors, and I don't know any of them, I have no idea who they are going to be able to learn from their mistakes, profit from their winners and become all better, or at least understand the stock market better than you could even imagine. And I think it's a great thing. And that's what it comes down to. So I'm going to continue to monitor this situation. I figure I do a live stream on this because it was in the news last week, and I think will continue to be in the news in the next couple of weeks. And you guys on my community tab don't tell me what you want to talk about. So I want to talk about something. So remember, on Saturdays, every Saturday, what you do is you go to my community tab on my channel, Joe Saglimbeni on YouTube, and you comment what you'd like for me to talk about for the next Saturday show. Right now, I have not been getting much participation, and it's probably because I'm a small YouTuber, and I'm fine with that. But I could talk about anything. I mean, I may look young, especially with all my hair. But I've been around, and we could talk about many things. And if I can't talk about it, maybe you could comment in the chat about something, and you could teach me. All right, so go to my community tab and check that out. After I finish this live stream, I will update my community tab for the correct date, and then you can put a subject you'd like to talk about. It doesn't have to be stocks. It could be about growing on YouTube. It could be about anything. And if I don't know it, I will probably reply in the comment that I probably don't have the ability to talk about it, that subject. And that'll be great. I'd love it, to be honest with you. And of course, if you guys like this video, like it, subscribe it, share it. Definitely comment on it when it does become part of my videos, my videos. And that's it, guys. So we had a small little conversation. Hopefully you guys liked it. And I will say goodbye now. And good luck with everything. And I will definitely talk to you guys next week. So goodbye and have a great weekend. Bye-bye.